Okay, Facebook, YouTube, here we go. All right, let's get going. Thank you, all of you guys, for joining us. I'm Rob Tatro from robtatro.com. I'm head of the Tatro Wealth Advisory Group here at Canaccord Genuity Wealth Management. It's been a really rockin' fun time when we're doing these lives. It's not been a rockin' fun time in the investment world or out in the real world out there. Today, I'm thrilled to have as a guest Julien Grenier. Julien Grenier is... Hey, good to see you, Julien. I haven't seen you in a bit, but good to see you here. Julien is a partner and a... give me your title again, Julien. It's a good title.
Yeah, I'm just a partner with Talbot Associates and the agriculture manager here as well.
Okay, thanks for joining us, Julien. So start thinking of your questions, folks. Today we're asking you guys about... we're going to be talking about specifically, like, you have an accountant here. This guy's, I don't know, $600,000-$800,000 an hour account. I don't know. He's a big shot. And I don't know. He's his time's valuable. We're thrilled to have him on the show. Think of the questions you want to ask him. Sometimes it's tough to reach your accountant. Think you have one here, so think of the questions you want to ask him, and feel free to put them in the chats in either Facebook or YouTube. So, Julien, I'm gonna maybe before we get into kind of the accounting stuff, what a crazy week in the markets, eh?
I sympathize with you. Your phones must be ringing off the hook with people just nervous about their investments and all that kind of stuff. How are you guys handling all the extra call volumes?
You know what? For us, the call volume is really not that intense. I'm sure people are worried. I'm sure they are. We're doing our absolute best to be extremely connected with our clients. We're trying different ways this time than in 2015 and 2011 and 2008. We're doing a ton of communication directly from me through either YouTube or Facebook, these video things. We're doing a lot of emails. We're doing a lot of one-off emails with people to let them know what's happening in their portfolio. We're doing a lot of planning. So Adam has been reaching out to people as well. So the communication, I think, has been extremely strong. So I guess because of that, we're getting less inbound calls. And also, I think, I don't know if it's a good word to say that our clients are... we've been practicing defensive investments for a while, Julien, as you know. So we've, I think our clients are, I guess they consider themselves relatively lucky, because I saw an article last week that the balanced portfolios, for the fourth time ever, a balanced portfolio, so 60% equities, 40% fixed income, is down 20%, and that's only the fourth time ever that happened. So we're definitely not down 20% for... Yeah, it's crazy. How about you guys? Julien? How busy is it in your world?
Yeah, so there's definitely a lot more inbound calls based on all these new changes, all these different announcements. And like you said, everyone has access to media these days, right? And so information is being trickled down to the end consumer before all the facts are concretized. So yeah, there's a lot of panic. There's a lot of people worried about whether they're going to be able to pay their employees and what they're going to do to make sure that they can continue to put food on the table for their kids, right? And so we're doing everything we can to stay on top of all these new changes and these updates here, so that we're just continuing on and giving that information right back to people, which is awesome. This Facebook Live idea, this is phenomenal, to get good information from advisors like yourself to people who really need really good advice. So kudos to you guys. This is great.
All right, well, let's start right off the bat, Julien. I'm gonna hit you with some questions, okay?
Sure.
Let's start with tax filing, all that stuff. That's mostly semantics. So if you could start with what's been delayed, what do you need to actually file? Do you mind starting there?
Yeah, a great question. But I think to really put emphasis on certain points here is what is not delayed, expressly not delayed. Okay, so payroll remittances need to be filed on time still. Okay, these are crucial because that's one of the most important pieces that the government's going to use to determine if your employees and things like that are eligible for CRE benefits or anything like that, right? So you got to get those filed on time. Okay. The other thing, it's not as popular for most everyday person, but the SR&ED credit, though they've expressly said they're not going to extend deadlines for that one. So that's basically if people are doing some scientific research or experimental development, some very big credits for people doing some really good things for a country, but no deadline extension for that either. Okay. Now, as it relates to your individuals, they've extended that filing deadline until June 1st. Okay. Normally that'd be April 30th. They're now going into June 1st for filing. And then they're extending the payment that's normally also due April 30th to September 1st.
Okay, so for guys like me who don't file their taxes until June 30th anyways, it's perfect.
Well, I think, yeah, you're a sole proprietor, I think officially, right? So those guys are a little bit different. They have till June 15th normally, so that remains unchanged, okay? But you do get to have an extended payment deadline until September 1st, okay? So normally interest would start applying right as of April 30th for a sole proprietor for yourself, but they are not charging any interest or penalties, okay? So that's a little bit different this time around as well.
Okay.
Yeah, I guess we might as well go into some corporate deadlines.
Yeah, take me through the corporate deadlines. Take me through the corporate deadlines, how that works, whether, what my year end is, when I can delay it, when I can't.
Sure. Yeah, absolutely. I'd be glad to. Yeah, so corporations, if you have a deadline, so most corporations have a 6-month filing deadline, firm filing deadline, okay? So if you have a deadline that's ending at any point after March 18th, your deadline is automatically extended until September 1st, okay? So that includes payment of and interest on amounts that came due after March 18th, okay? So you gotta be careful with penalties and interest. So penalties is something that would apply immediately if you don't file on time. Interest is something that starts to accumulate if you haven't paid your balance due by a certain date, okay? And those can be different. So for, let's say, an example, a September year end, normally the payment deadline would be December. Now, if you didn't pay your taxes on time at December, interest would accrue up until March 18th, at which point you'll have some relief, okay? Now, if your payment deadline is is March 31st because of a December year end, right? Those payments are, again, deferred until September 1st. And no interest or penalties will apply on those balances. Okay. As for GST and PST, those kind of roll into businesses as well. So for your GST filings, they haven't expressly said if they're extending the deadline to file, okay? But they have said that they won't apply penalties and interest if your deadline is February 29th or later, okay? So what that means is that obviously they won't charge the penalties or interest. However, there are some things that benefits that some companies get or some businesses get for having a perfect compliance history. Okay. So if you're late filing your GST, that would break your perfect compliance history. And so they haven't expressly said if they're going to continue that type of, if they're going to enforce if you miss a deadline or what have you. But they really need to know these things, right? They need to know how much sales these companies are reporting so that they're able to administer the benefits properly. So I think that's why they've been a little bit hesitant on saying outright, don't worry about filing for these things, because they still need to have that data about businesses. Because if they don't have it, they're dead in the water. And so for PST, real quickly, as long as your monthly amount owing for PST is less than $10,000, your deadline will also be extended until June 22nd. That is payment and I believe filing as well.
Okay. All right. So on that point, one of the questions I've been getting the most on a similar point, one of the questions I've been getting the most, and you're probably getting inundated with this, is the wage subsidy for employers.
Yeah.
So, the common, what I've heard and what we're seeing in the news is that the first 75% is a subsidy for employers, provided you can show that 30% loss of revenue. Now, I heard them talk about non-for-profits. I run a non-for-profit, so I kind of curious about that. What about startups? I have so many questions about that one. What do you know about it, and have they even hammered out the details yet for that?
Yeah, and that's a great question, and by far the number one most popular question this week is, do I qualify for this wage subsidy program? And you know what? Unfortunately, they don't have all the details out right now. But what I can tell you is that, yes, so if you've experienced a reduction in sales volume of 30%, and what they've said by that is this, let's say your March you had $100,000 of sales last year. Well, if you have $70,000 or less in this current year, you would qualify for this wage subsidy. Okay, so on the surface, it seems relatively easy enough, right? And then the max benefit is limited to the max EI coverage benefits that people have. So roughly $57,000, or translates to about $847 per week. So if you have someone who's earning that type of those dollars, they're going to be covering your employees up to 75% of what you pay them. Okay. Now, this is a benefit for people. Yeah, go ahead, Rob.
Well, so just to be clear, that's a subsidy to the employer. That doesn't go directly to the employee from the government. So, in my case or your case, that would go to us to help us pay our staff. And I guess they're hoping that we'll top up the 25% and we're not going to lay anyone off, right? That's the idea?
Yeah, from what I can gather, they're trying to restrict the amount of people going on to EI, right? So they want for people who can work and earn something, they want to limit as much of that government spending as possible. So if there's work to do and people are at work, they might as well do as much as they possibly can to keep the economy still going. So even if they aren't fully working full time, or right, so it's an incentive for people to keep them on. So even if they don't have the full hours, well, they still get paid up to 75% of their regular hours, right? So so it is a measure to try and stop people from going on EI. Okay. So the wage subsidy, the big questions that I'm getting are for people who may be owner operators, or may be shareholders of their own businesses, or non-arm's length, or what I should say, not related to someone, so who are related to someone who runs a business. So obviously in our practice, we're getting a lot of questions related to that because, well, a lot of our clients make up that type of demographic, right? So unfortunately for them, there are some holes in this wage subsidy program. We are working with CPA and in constant communication with our ministers and things like that to get the most up-to-date information as quickly as we possibly can. But I think that's the thing, is that the government's trying their best to give money to these people, to these businesses. And, it's kind of one of those things they want to give the money out, but they don't want to see abuse. And they've been very clear about that, right? They don't want people, like you said, it's a subsidy going right directly to the employer's hands. So they're trusting business owners to make sure they're doing the right thing and making sure that they're trying to get their staff and keeping them employed.
I would imagine, Julien, that this will be one of those situations, and I don't know, but that because this has never happened in Canada. We've never sent checks directly to employers as a subsidy like this. I would imagine it would be a situation where, kind of honor system to start, maybe. But however, once this kind of blows over, if we found out that you were unethical and you took advantage, I would imagine the fines are going to be heavy, and it's going to be penalty plus, pull everything back, etc. Right?
Yeah. I can imagine that. They haven't announced specifically what kind of penalty measures are going to be in place, right? But they don't want people cheating the system, and so, right. But with this uncertainty, people still don't know exactly what to put on the application. Luckily, the application is not going to be out for a little bit yet, so they have some time to clarify what they mean. So we still have some time to figure that out. But like I said, as soon as we get some more information, right, sign up for our newsletter, and you'll be the first to know as soon as we got the information.
Yeah, good point. And we were talking about this last week, you and I, Julien. We're like, oh, by next week we're going to have a ton of clarity on this. And here we are, Thursday, and we still don't have the clarity on this. I mean, I'll say this from a market perspective, I'm somewhat thankful that we're seeing this because, what would have happened had there been no subsidy announced, had there been no quantitative easing, had there been any stimulus of any kind on behalf of the government? Well, I think we would have gone into a full-blown, never mind a recession, like a full-blown depression, right? So, I'm kind of glad to see it, the level of stimulus that they announced. That's good for the market. I think it likely saved the stock market from dropping further. Now, I just hope they could figure out implementation, getting the checks into the people's hands, and making sure that the check is in the right hands, right?
Yeah. And you have a lot of people worried about the timing of the thing, right? So the measures that we're recommending to clients right out the gate is essentially, they announced that $40,000 business program loan that's a 0% interest loan, where as long as it's repaid before December 2022, you'll get up to $10,000 of that amount back. So get that $40,000 interest-free loan set up. Talk to your bank. I know it's still working the final kinks out, but any day now that should become available. Get that loan to cover you for these next little whiles. And I understand $40,000 for some businesses is not enough, right? And that's where BDC, backed by the Canadian government, would help big time. They have some working capital loans, and I'm sure that they're working around the clock to make sure that this capital is getting out to people to pay their staff and all this kind of stuff. So my best recommendation for business owners who are waiting for this wage subsidy, who are depending on this wage subsidy to kick in to pay their workers, the best you can do is get this temporary financing.
Okay. Hey, Julien, we're getting a lot of questions on YouTube and Facebook. I'm just gonna rapid fire a couple. One of them's here.
Sure.
From James. He was under the impression that the subsidy was actually applied against remittances, not actual funds to employers. Have you heard about that one?
Yes. So that's just so the initial subsidy was the 10% wage subsidy. Okay, so there's now two coming into play. So that 10% wage subsidy was deducted from what employers had to remit to CRA on a monthly basis when they remitted their source deductions. Okay, so those taxes that come off your check, well, your employer was getting a discount on that. Starting a few weeks back. Okay, so now with a 75% subsidy, you can imagine that, well, there's not enough deductions to cover 75%, right? So the exact details on how that money is going to come out is still not perfectly clear, but I'd only imagine it has to be some sort of kickback to that employer.
Because they can't, if there's nothing to offset it against, they can't just offset it against nothing, right? Like 75% is too much.
So I'd imagine that it would be kind of a system where it's like, okay, well, you first reduce your deductions to zero, and then you apply for the separate amount back, kind of thing.
That would make the most sense.
But another question, I don't know if there's other things about that, but the 10% wage subsidy is still in effect for people who don't qualify for the 75% wage subsidy. They would still be qualified for that 10% one.
Okay, that's good. Hey, another couple questions here. For those that need to be, Sandy, thanks for the question. For those that need to be laid off, does an ROE, a record of employment, have to be completed?
They've kind of waived the waiting period for those ROEs, so you can directly apply without one. Now, if you are getting laid off, you should still be submitting an ROE for those individuals, okay, as an employer. But as an employee, right, as soon as you no longer are employed, you should be able to fast track to get some benefits. Now, that's another point that kind of changed a little bit over the course of the weeks, is that they had the initial emergency response benefit with some EI rules and tweaking to the EI. But that's pretty much completely been replaced with the CERB, okay? The Canada Emergency Response Benefit. So if you are no longer have work, the CERB is going to give you $500 a week as long as you qualify for that CERB. Okay, so to qualify, you need to no longer be working. Okay, because of COVID-19 or something related, and you must have at least earned $5,000 of income in the past year, basically, or in 2019 altogether. But okay. It's relatively straightforward in that sense.
Okay. Here's another question. This one's directly from me. Real quick,
okay.
Name me your favorite investment or accounting movie ever.
Well, I mean, to be honest, I'm a big fan of The Wolf of Wall Street. DiCaprio, he should have won an Oscar for The Beach or something like that, right? But I love The Wolf of Wall Street. I really enjoyed it for sure.
I want a double martini and I want another one every 5 minutes until I'm drunk or something like that. It's funny.
Something like that, yeah.
He's funny. Yeah. Okay, now next question here. Question about, by the way, feel free to tell me your favorite investment / are there any accounting movies? Is that a thing? Is that a theme?
Accountant.
Which one?
There's The Accountant.
Who watched that? The Accountant?
We did a whole field trip with our office to go see The Accountant. It was actually better than expected movie.
Okay.
Ben Affleck.
Okay, fair enough. So if you have ideas, please put them on. We'd love to hear your favorites. If an employee, question from M, if an employer has to step into business operations and do the work of laid off employees, do you think they could pay themselves a wage and receive the subsidy?
Yeah, so that's one of the things where it's really difficult, right? Where I kind of alluded a little bit to people who are related to the business owner. So you yourself, you're related to your own business owner. Their benefit is unfortunately restricted at the moment to what they've paid themselves prior to pre-crisis, is what they're talking about. Okay, so you can't just necessarily change your compensation method or decide to start paying yourself a wage just to get this benefit. Now, like a lot of questions like that are coming up, right? What if this happens? What if that happens? What if I have to fill in for somebody else? And that's where we're really hoping that we can continue through continuous conversations with CPA and our ministers to really get this thing right? Because it really would be unfair to do everything you possibly can to save your business and not get the subsidy, even though you're someone who should get it. You know what I mean? Based on the feeling or the nature of what this benefit's intended for.
A question about, I asked you earlier about this, either non-for-profits, which have either very little revenue or not a ton of revenue, and or startups, which did not have revenue a year ago today. Have you heard of anything with respect to them? I understood the process to be kind of an exception application process, where there would be some sort of form or area where, I could apply as the Canadian CMV Foundation. Our revenues are down because we weren't able to host some fundraisers. We weren't able to, no one's donating because, money's tight. As a result of that, we'd like our employees subsidized. Do you see that process happening where it's like an application process through a website or a portal?
Yeah, I mean, for sure going to set up, they said they're going to have an application portal. Okay. We haven't seen details on that portal, what's going to look like, specifically to charities and things like that, where sales isn't their main metric, right? They're going to have to announce some sort of different thing other than sales, I'd imagine. They haven't gone out and completely said anything specific from what I've been able to see. But yeah, a perfect example, like another perfect example of someone who may not be covered based on the rules as we see today is someone who's expanded their business. Maybe they had 5 employees last year and they've ramped up operations, and now they're a company that has 20 employees, right? Even if they've dropped 30% in their sales compared to wages, they would technically not qualify as we are seeing it today. So we should get more details on Friday, which is tomorrow at this point. It's hard to decide to remember what day it is when you're working on your base.
Especially when you're coming to the office every single day, 7 days a week, morning to night, and all the days look the exact same, because by the time you get home, it's eat, put the kids to bed, and check your emails and go back to bed, and then come back and repeat.
Exactly.
Yeah, today is Thursday.
It's Thursday. So tomorrow we'll be hopefully hearing a little bit more. And like I said, there's a lot of uncertainty around this wage subsidy, and it's very confusing and it's very muddy. But day after day, we're going to dissect more. We're going to get a little bit more information, and hopefully see some clarity the next couple of days on this wage subsidy specifically. At least the CERB sounds like it's pretty much fleshed out and it's ready to go. April 6th is the date that you can start applying as an individual. So if you've been out of work for since March 15th, they'll backdate it. But basically, it's based on the date in the month that you were born. So April 6th, I think January to March babies get to apply. April 7th, April to whatever. So there's a breakdown. I don't have it memorized, but that's the kind of thing. So they're going to stagger things to hopefully not overload their servers all on day one. So January to March babies, you guys are lucky. You guys can apply on April 6th.
Okay. A couple feedback with respect to movies. Apparently, Rayanne actually watched The Accountant. She was one of the 7 people that watched it when it came out. I've never heard of it. I'm sure it's a good movie. I haven't heard anyone else feedback with respect to that movie. Derek tells us that the best accounting movie ever is The Shawshank Redemption. Andy Bernard.
Shawshank.
What's that, Julien?
No, just thinking about the Shawshank. Like, I guess that's technically an accounting movie, I suppose. Yeah.
Oh, what a great flick! What a great flick!
Very good.
Questions coming in on my business Facebook, which it's not coming in to mine, Mox. So please just wire it to my ear, Mox, and I will ask it. I'll ask it to Julien. Otherwise, I'm going to keep going with some questions we got online here. By the way, guys, don't forget, I'm also here and I will give you a quick review of the markets, what happened at some point. But I do want to give Julien some time here. A question from Brenda. If you own a small business, sorry.
I did have a question for you if you have some time here. Right. So we're hearing a lot about these the mandatory RIF withdrawals being relaxed, and a lot of clients asking kind of, well, if I'm forced to withdraw some cash, what are the strategies you guys are implementing? What do you recommend on that kind of thing? So if you have clarity on that, and a follow-up recommendation for those people.
Yeah. So there's a difference between withdrawing and actually selling investments, right? Because you can withdraw investments in kind. So let's say you do not need that cash flow. So the minimum RIF withdrawals, some people need the cash flow. They need it every month. They need to put food on the table, pay the mortgage or pay the condo fees. Other people don't. They have enough assets that it's merely a tax drawdown for the government. So if they are drawing that money down and they do not need it for cash flow, I would strongly advise the obvious place would be to move it to a TFSA in kind. Like, you don't want to be selling a Royal Bank stock, or I'm not mentioning specific stocks here today, Julien, but you don't want to sell a stock that is down quite a bit, that's high quality. You want to move those in kind. Now, if you don't have room in your TFSA and you're maxed out in your TFSA and you need to pull out a RIF and you don't need the taxable income, that will go to a non-registered account. If you're married, likely a joint non-registered account. And in that account, you should definitely focus on tax-efficient investing. So take a look at anything that pays a return of capital that is not classified as taxable income in the year you receive it. Canadian eligible dividends, preferred share dividends, those are beat up quite a bit right now. Those might be attractive. All of those are paying you tax-efficient income in your non-registered account, so you don't have to declare that income as high on your T3s and your T5s at the end of the year. So that's what I would do for that.
Tax efficient. That's what I like to hear.
Yes, we're on the same page. Did you have a follow-up? Otherwise, I'll go to a few more questions online here.
No, go ahead, for sure.
Okay. A question from Brenda. If you own a small business and it has to close, what happens with PST and GST payments? I think you covered this early on, but do you mind just touching on it again?
Yeah, GST and PST deadlines are extended, right? So they haven't gone out and said that they're not payable at this point. They're just extended. So yeah, like if you're closed and it bankrupts you, that's a whole different story. But right now it's deferred deadlines and no penalties, no interest on late payments. PST June 22nd, GST September 1st, I believe. Yeah.
Okay. Question from Reggie. By the way, for those of you who didn't know, Julien is a francophone. On pourrait faire cette entrevue ici en français.
Je pensais qu'on faisait celui en français juste tout de suite après.
No, on le fait en anglais. We're doing it in English today. But Régent owns a corporation and he pays himself a salary. I think you touched on this earlier, but I'm asking anyways. The income in the business is going down more than 30%, so he would qualify. Can the owner apply for the 75% subsidy on his own salary? Yeah.
So from what I understand, that should be okay as long as because they're limited to the pre-crisis income. Right?
Prior history needs to be there, right?
Yeah.
Okay.
Yeah.
Suggestions. Question from Mike. Suggestions if an employer is not interested in doing the 75% wage subsidy. That's a tough one because what do you? Yeah, I don't know.
I mean, like with any government grant or subsidy program, if you're not interested in getting the income, you don't have to apply, and it's business as usual. I'd encourage everyone who's eligible to apply. It's not every day that the government hands out checks, so right. It's again it's not there to abuse the system, but if you qualify, it's likely because your business is the one that needs the support, right? So I'd say if you're in a business that doesn't need the subsidy, take the subsidy and pay it forward, right? Donate it to a charity, donate it to, or give it to other companies in need or something, right? Do everything you can to help out those in the most need, right?
Look at that, Julien Grenier, the altruist.
Yeah, it's pretty much it follows me everywhere.
Good for you. I believe the same thing. Obviously, I'm a big believer in philanthropy and giving back, as you know for sure. Let's talk about a question I got online here from Bill. If your employer, I'll read it. If your employer doesn't qualify, should you remind the employer that someone's laid off and they don't quite lose all their hours. So someone's laid off from full time to part time. What happens to the subsidy? What happens to the EI benefits? How does it work for the actual recipient who's laid off?
So technically speaking, if you're a full-time employee, for example, and your employer tells you, hey, you know what, like, I got to drop you down to part-time because we don't have the hours for you, or there's just not the work, right? They're technically supposed to give you an ROE at that point, even in normal circumstances, okay? So this is something that is eligible for people where they can be both on EI and being paid by their employers. So if you don't qualify for the CERB because you're still technically working and your employer doesn't qualify for the wage subsidy, so they can't afford to top you up, you can remind your employer to kind of say, hey, you know what, like you should partially lay me off so I can partially get EI. So that is something that is available to people. So we do have a little bit of a flow chart on our website and things like that. But if things are not clear and you think you might want to lay off half your staff or part-time or something like that, you don't qualify, send me a message or give me a call and I will get you the information you need for sure.
Yeah, and for both clients of the Tatro Group and clients of the Talbot Group, I think if you're not getting these wonderful emails from Talbot, my clients that are watching, if you want to be added to this, send me a note. We'll get you added. They send out some quality content. Julien, if some of your clients want to get some content about investing, what we're doing right now in the market, how we're protecting capital, what we've done. Just so you know, yesterday we put about 1,000 trades in for our clients' accounts. We were extremely busy yesterday. We had kind of accumulated some cash positions over the last several months for our clients. And yesterday we put some of that cash back to work for our clients. Because, quick tangent here, Julien, but I looked at the 2000. I've done a lot of revisionist thinking here in the last couple of weeks. And I've taken a look at a lot of videos from February and March 2009 when it was the end of the world and nobody was buying stock. Like truly nobody was buying stock. And I took a look at the numbers that advisors have done, guys like me, professionals that are supposed to be advising clients. Well, not only did they completely screw up the trade in 2008, 2009, they actually ended up being late on the upswing for the clients. So they were overexposed to stocks when the market peaked. They only had 23% cash, which was the cash for fixed income, which is the lowest kind of ever. And obviously, they sold everything at the bottom. Advisors, professionals like me. So we are not going to screw up that trade. I talked about this on Mondays again. I'm talking about it again. You are paying your advisors for quality advice. You're paying them to go to work. You're paying them to talk to their experts. I had a call this morning with Martin Roberge. By the way, he's going to be on next week. He's our chief North American macroeconomist. He's unbelievable. The guy is, I'll have to ask him to tone it down for this show because he's a million miles an hour and he's too much. But regardless, we're supposed to do that, right, Julien? Like that's my job is to talk to these people and then to make the tough decisions. Nobody wants to buy right now, right, Julien? Nobody's out there buying stocks. We are, okay? We see this as a generational opportunity. We see this as, if you look at the last 12 corrections in the stock market, if you look at, take the last 12 corrections that have been at least this bad, 30% or more, every single one of them had dramatically positive returns 1, 3, and 5 year out. So specifically 3 and 5 years out. I think one of them may have had a negative 1 year number, but we know that we're gonna be extremely thankful we bought stocks in April 2020. And the key is it hurts in your stomach. It hurts to do it. It hurts to put the trade in because you're the only one buying. Anyways, we're buying and we're not going to replicate the mistakes that happened in 08, 09. And I think this is an exciting time as much as it's really, really tough. For me in my life, this is an exciting time because I get to prove my value. I get to prove my worth. So I'm pumped, and I'm sure you are too. Like, this is a time where you're giving a ton of advice to people, and they really need us. This is a time when people really need us. So I'm excited about that. I know that it's shitty, everyone. I know that it sucks to be down. I know that more than you. I'm managing your money. I see the numbers every single day, and I know that it's tough. But we're going to take advantage of it, and we're going to do the absolute best we can to rebalance, to tweak, to take capital where we can, to reallocate. And that's happening now. That's happening every day here at the office with me, my dad, and Derek. By the way, guess how many firms, Julien, on my floor are still open? It's
yeah, probably one.
yeah, we're the only
awesome
we're the only one guys open.
It's awesome to hear all the things that you guys are doing and implementing, because yeah, it comes down to trusting your advisor. And I know all the clients that I have that are mutual between us, and they have so much trust in your guys' firm, because you guys do great work. You guys are constantly on top of things, educating, and are definitely some leaders in your guys' industry. And so
all right, that's enough, Julien. That's enough. I appreciate it. You're being nice to me. Hey, Julien, I'm gonna put your email here. Some people are asking me about your email.
Okay.
Are you okay just putting it on here so people could reach out to you?
Sure, absolutely. I'll be up responding all night. That's good.
It's J Grenier. What is it again?
Julien, Julien.
Yeah.
.Grenier.
Yeah. At Talbot.
CPA CPA.ca.
CPA.ca. Julien.Grenier at talbotcpa.ca. I'm going to put it in the YouTube, and I'll let the Mox put it in the Facebook chats for me. Let's keep going with some questions here. We're getting some more questions online here about specifically. Sorry, just give me 1 sec. I'm just reading. This one here came from Eugene. Whether or not the benefits, both for the companies and for the individuals, are taxable, and if yes, is it remitted at the source, or are we going to have to pay that off at some point?
Yeah. Great question. I was listening to your show the other day, Rob, and someone asked that question, like, well, how are we going to pay this back, right? Who's going to be responsible to pay this back? And you had a good answer for that. But what people need to realize, I don't think realize at this point, is that all these benefits are taxable, right? So that means, let's say your average tax rate in Canada marginally is 35%, right? Brace yourself for 2021 when that is going to be added to your taxable income, and they'll be collecting a lot of that benefit back through taxes. So everything is taxable, but they're not withholding any tax today, which means all the tax is going to be due next year. So it's something, and I'm glad, Eugene, great question. I'm glad you reminded me to kind of talk about this, because it is something that we were strongly warning our clients about, putting notes on everybody's tax return saying, hey, just so you know, these benefits that you'll be getting will be taxable next year. So similar to I don't know if people remember the UCCV when it came out, that was taxable. It was kind of a little bit of a shock. This one's going to be, the bigger your benefit, the more your taxable is likely to be.
Question about farms and farmland, or specifically farmers. I had a call this morning with one of my clients who they operate a farm. It's going to be tougher potentially for them to prove revenue numbers, because a lot of them are maybe not selling their stuff, either their cattle or their crops or whatever they may have. Subsidies, and how do you think you see another program coming to farmers, or do you think this one will be all encompassing for farmers?
Yeah, and today they haven't done a whole bunch they haven't given a whole bunch of information about the agriculture industry in general. Beyond, they seem to be focusing on businesses and individuals first, which is okay. But I mean, a ton of my agriculture clients, because we do a lot of agriculture out of Talbot Associates, right? They're asking, well, does this apply to me? How is it going to work, right? So they have offered, they are backing FCC, similar to how they're backing BDC, through additional lending and things like that. The farmers, you guys are still eligible for the $40,000 loan if that works for you guys. But what they did say, and they haven't talked a lot about it, but what I'm reading into it is that they're going to offer continued support through their existing business risk management support. So the more popular ones are your Agri Invest and your Agri Stability. Okay, so if you're a Talbot Associates client, you're almost almost for sure an agri-invest. And if you're in the agricultural industry and you're not an agri-invest and you're not sure what I'm talking about, you need to talk to me, because that's a huge, awesome program that every farmer should be in. But agri-stability is more of an insurance. Okay, so they've talked about increasing those benefits. So what my recommendation for people in the agriculture industry is, talk to professionals. Call me up. We're offering free consultation on anyone looking to find out if agri-stability is something good for them to go into. So send me an email, give me a call, free consultation to see if you should go into that program. But to me, being in that program is giving all the data to the government to decide whether or not you should get an extra benefit some way, somehow down the road. Who knows what's going to happen with the the crop markets, or the cattle is down like crazy. I think, Rob, I'm sure you could confirm that.
Yeah.
So
I had a client on that point, Julien, real quick. I spoke to two clients, one in the hog industry and one in the cattle industry. My client in the hog industry told me that his fixed price contract per isoine, or I think it was a young pig, I think is what they call them, isoines. He was down like 40% on his fixed price contract, and it was a take it or leave it. Otherwise, we're breaching this contract. And a very similar situation to my cattle client that I spoke to in the last couple of days, that are basically telling me we don't have a choice. They're either breaching this contract, then we have to sue them, and we have to try to collect, and good luck, or we take 40 cents on the dollar for now. Crazy.
Yeah. So it's absurd, right? So the agri-stability program gives a lot of data to the government to see how your farm performed comparatively to previous years, right? So similar, like I was saying, filing things, but the agri-stability program, we've seen this in the past before, where there's disaster areas or things like that. People in the agri-stability program often get automatically enrolled to these for these additional benefits over and above what agri-stability does, normally speaking. Okay, so if you want to try and avoid delays, strongly consider going to agri-stability. So keep in mind, agri-stability is still not for everybody. Okay, I understand that. But if you're on the fence, or you're not sure, or if you're not in and you've never heard about the program before, you need to talk to your advisor. And like I said, if you don't have one that you know and trust, send me an email. I won't even send you a bill. I just want to make sure that people that should be in this program are getting the information that they need, and which is why I'm so happy to be on live with you today, Rob, because there's so much information to kind of go through, and it's so hard to keep up, even for ourselves. It's so much.
You're a half decent guest. Yeah, I might just bring you back on the show. You're so good, and there'll be so many answers that are going to come in the next couple of weeks that we'll have more opportunity to talk about this. Maybe when more stuff has been firmed up, maybe in 3-4 weeks or something. I'm getting a question here online from Rich. The question is basically, it's a long question, but the question is basically, he's not getting laid off, stable income from his wife, she's working from home. He has an ability to defer his mortgage payments through his bank and invest that money. I guess this is more a question for me than for you. Would you recommend I take advantage of the deferral and just plow that into the market? The numbers that he's talking about are about $600-700 biweekly. So I guess my answer to that would be, it's a relatively small number that you're deferring over the course of 3 or 6 months. Depending on your net worth, it's likely not going to have a huge impact. I mean, if you were able to buy $100,000, defer for a year or 2 years, and you were able to defer that for, maybe you would consider that, but a few $100s for a few weeks, I would likely advise you to just continue to pay your mortgage. Don't apply for the deferral. Don't worry about the credit score. Don't worry about the communication with your bank. Don't worry about tacking on principal payments at the end. I would likely advise you to just continue to pay. If you're in that situation where it's less than $1,000, the net benefit will be small. I don't know what you would think about that.
Yeah, actually, that's a great question. To be honest, I would have had the exact same question for myself. Should I defer if I can? Because you'd expect the obvious answer to be, invest as much as you can if you're comfortable to do so. So I appreciate your point of view, but I think it kind of echoes a lot what I've been telling to some clients, is that continue to try and pay your bills and stay on top of things for as long as you can. Use these subsidies for as long as you can, right? But just because you're employed today, we don't know how long this is going to last, right? We don't have that crystal ball, right? So if you're in a position to stay on top of things, stay on top of things, right?
Question here coming from Brian. Am I understanding correctly that the $40,000 loan is applied to our local bank? It's applied to in our local bank.
Yeah. So your local bank, they can all have the tools to administer this loan program. So yeah, they would have the direct details. I know I talked to my banker yesterday or the day before just to see if the application process was open yet. He told me no, not yet. I didn't check today. I meant to. Sorry for that, guys. But from what I can understand is that as soon as it's open, there was going to be an online filtering quiz kind of thing to see if you apply, and if you are eligible to apply, then you get screened in to talk to a rep or something like that if to physically get it set up.
Question here from Carlo Cucumber. I doubt that's his real name. Asking about tax loss selling, and I guess we can kind of both talk about this in a non-registered account. So real quick, tax loss selling, folks, would be selling a security that has lost its value. Now, this must be done in a non-registered account because you do not get the losses in a registered account. Like in your RSP or in your TFSA, you do not get the losses, so you can forget about them. So would you recommend tax loss selling in a non-registered account? The answer would be yes. I mean, if you own a security that is of quality, that has fallen 30-35%, and you are able to find a proxy for that security, so for example, you would sell one bank and replace it with another on that same day, and you avoid the market timing risk, our view would be you're crystallizing a loss there, you're resetting your ACB, you're able to offset that loss against prior gains in the prior years, and you get to carry forward that loss. You would agree with that, Julien?
Yeah. I mean, like crystallizing losses has been part of the tax book for a long time. There are a lot of rules surrounding tax losses and stopping market manipulation moves like that in general, right? So if you're going to do some loss planning, make sure you have an advisor like Rob or something like that who can steer you through those, because we've seen it many times before where people are doing their own financial advising, or not their own financial, they're doing their own trading, right? And they're trading into tax problems, right? And they think they're being sneaky or good and all that kind of stuff. But I mean, the tax people have been around for quite some time. So there are some stop loss rules and things like that can deny some of your losses. So make sure you have, if you're going to be doing some or triggering some trades and things like that, make sure you talk to your advisors, talk to your professionals to make sure.
Give us a call. This is what we do, right? So what you don't want to do is buy the same stock in a different account or non-arm's length account. You can't just sell a stock and then rebuy it. You cannot do that, and you do not want to go out of the market for 30 days right now, because as I've mentioned on the show before, being out of the market for 30 days in a period like this, now that might be 2 years worth of gains, right? So you do not want to be out of the market. So if you're doing it, you got to make sure you're optimizing your tax loss selling, and that's not that easy, specifically if you're getting into illiquid stocks. You might get beat up on the sell and the buy, so I would strongly advise you deal with someone like us. Question here, I believe Derek is quoting a website or something. He's saying assistance received under either the wage subsidy would reduce the amount of remuneration expenses eligible for other federal tax credit calculated on the same remuneration.
Okay.
So the wage subsidy is reducing the amount of remuneration expenses that are eligible for a federal tax credit calculated on the same remuneration. He's asking clarification for that. Do you have the YouTube stuff up here, or do you want me to?
No, I don't have those up in front of me. Sorry, guys. Like,
it's a tough question. No worries.
Yeah.
We can maybe, that's like a triple negative question there, so it's a bit of a tough one.
Questions that went unanswered, I don't mind, send them over to me at the end of the thing, and I can provide some sort of summary or some clarifications, or if I might have misspoke or something like that, it wasn't clear. I have no problems kind of going over and re-clarifying.
Okay. So it's the end of tax season. You finally finished your last tax return. It's 2020. It's been a really long year. You're going home. You open the cupboard. What's the drink of choice in your cup?
Oh yeah, one of my friends got me a 15-year Oban Scotch. So I think that would be the first drink I pour. How about you, Rob?
Probably be a Bud Light.
Easy drinking, right?
Yeah, I'm a simple guy. The Scotch, I struggle with that. It's like it tastes like turpentine. Like I guess a acquired taste, right?
Absolutely,
Yeah,
absolutely.
that's kind of how I felt when I started eating the old cheese, like the really old cheese. and
Okay.
then and then it just like now I love it. I love the old cheese. I can't drink the mozzarella standard or whatever it's called. I need the extra old. The older the better. Um, I got a question here, Julien, about well, this one is more for me. It's positioning portfolios for a bottom. I've gotten this
Okay.
question pretty much on every show in the last every. I'll answer it again because I think it's a very important question. Positioning portfolios for stock bottoms. A bottom is effectively the nadir or the opposite of the apex. So when we kind of peak at the bottom, that is a true stock bottom. So a couple of weeks ago, we bottomed on the TSX, on the Dow, and on the S&P, on all the indices. We then rallied a bit. We had what we call a relief rally. I believe there are three phases to a stock market crash. This is a note from our chief economist, Tony Dwyer, which I think I will get on this show in the future. But the first is a crash, massive selling. Everyone who wants to be out is out initially. People that should not have been in the market. The second phase is the relief rally. The relief rally is people coming back in and saying, you know what, this isn't that bad. I can buy stocks at 30% off. I should be buying stocks right now. You call your advisor, you call Rob, you scrounge up 50 grand, 100 grand, quarter mil, whatever it is. And then the third phase is the capitulation or retesting of the lows. And that typically happens when the second wave of bad news hits. I do not think we've hit the bottom yet. I've said this to my clients on Monday. I'm saying it to you guys now. I said it last week. I believe there is another leg down yet. I believe you're in for volatility. We still have a few factors that have to happen. I had some notes here that I had all my reasons why, but basically a bunch of things have to happen. One, we have to get basically we have to get flush all the speculators out of the market. We have to get the volatility down before we can say we're out of the relief rally. We're not even out of the relief yet because I don't know if you noticed the market this week, Julien. Probably not because you're doing tax returns. But this is all I do. I take a look at the market. Well, I did. We've now had like 7 or 8 consecutive days here without a 3% swing. So we haven't had that in forever. It used to be 4%, 5%, 6%, 8%. So this week we had 3 up days and only 1 down day. So that I would classify as a bit of a relief rally. There will be a period here where we know we're going to get a lot of deaths next week. We know there's going to be a lot of cases. We know there's going to be negative sentiment. We know people are home. They're stuck at home. I believe there needs to be another leg to the down. And when that does happen, we kind of set the target on my call today with Martin Robert. We set the target for 17.8 on the Dow, for 11.7 on the TSX, and 2,300 on the S&P. I'm going on record saying that. So, I mean, that's a guess where we think the low will be. Around that point, all the cash that we have left on the books in our clients' accounts, we're going to be pretty much fully invested at that point. So hopefully that answers your question. We want to be fully invested at that point. We do not, Julien, to be clear, we do not change risk tolerances for clients. If you're a balanced investor, just because the stocks are 35, 40% cheaper, that does not mean you're going to get a pile of stocks right now. We don't do that, right? A reason we don't do that is because not everyone can handle the volatility the same way. There's a reason you're a balanced investor, is because you want less volatility, right? And if you want less volatility, you're also accepting less returns, but you can't have it both ways. You can't just say, oh, now that the market's down, I want a ton of stocks. So we are rebalancing, though. We're effectively rebalancing. So now that markets have moved, the stocks are worth less than the bonds. So therefore, you can do a bit of rebalancing, take advantage of that. So that's our view on the bottom, how we're going to navigate this bottom, and how long it's going to be. I really don't know, but I expect that kind of bottom capitulation to happen in the next, 2 to 6 weeks. How about that? Again, guys, do not take this as investment advice. What's that?
Bold predictions. I love it.
Well, I'm basically reiterating a combination of some predictions that we've made at Canaccord and what we feel. This is not investment advice. Do not take this as investment advice. If you're my client, we're taking care of this for you. Don't worry about it. If you're not my client, do not go trading on this. Talk to your investment advisor. If you don't have one, call us. That's a big disclaimer that I want to put on those predictions. Okay, folks? Maybe another question here from Dennis. I have conservative TFSAs that have lost around 7%. Is this a good time to move the investments to GICs to avoid further losses? What would be the advantage of doing this, if there are any? Just another question for me, Julien, but I'll address it. What do you think for that answer, Julien?
Based on hearing from you guys, I'd say I'd want to keep my upswing stocks in my TFSA, but that's just me.
Yeah, so I would say this, Denis. If you've had conservative investments and you've lost around 7%, your asset allocation is likely something like 30-70. 30% stocks, 70 bonds, or maybe even 20-80. To make that shift from TFSAs and investments, very conservative investments that have lost 7% to GICs, you'd effectively be losing that. There's no way you'll gain it back, and you'd be locking in GIC rates that are effectively the lowest that anyone on this call has ever seen. No one on this call has ever seen GIC rates as low as they are today. That being said, Denis, I don't know your risk tolerance. I don't know. Maybe you should have never been into stocks. Maybe you were not the guy that should have owned conservative investments. Maybe you should have only been GICs from day one. So I'd have to have a chat with you. At the end of the day, are you sleeping? Are you sleeping at night? If you're not sleeping at night, and if this is eating up inside to the point that you can't function, we need to take a look at the portfolio, the asset allocation. Because at the end of the day, who cares what the returns are? We're only on this planet once, and we have to make sure that we're healthy. And that, the money part can't eat inside of us. It can't. It just can't get there. It's extremely important. I'm a big believer of health and wealth. My sister runs a gym. As you could tell, I'm incredibly fit. No, I'm not. I got like 2 necks here. But I do believe that it's important not to stress out about your portfolio. So I would take a long, hard look at what your asset allocation is, Denis. And maybe you should have never been in stocks in the first place. So that's a big part of our job, right? Hopefully that answered your question. Another question here. I don't know the answer to this one, Julien. From Chantal. I heard there's a $400,000 small business loan made available. She's probably referring to the $40,000 one, right?
There's a $40,000 one for sure. Yeah. And through BDC and FCC, there's considerable loans much higher than that. So yeah, 400 sounds like it'd be 40. The ones through BDC and FCC, those ones are more so dependent on your financial statements and your financial health as opposed to a set limit per se. So
okay, good. Hey, Julien, is there anything that I didn't cover that you think I should definitely address with respect to deadlines? I mean, I did kind of want to ask you a little bit about collections. I'm assuming that's being stopped right now.
Yeah. So any sort of audit issue, they're not CERB's not starting any new audit issues. They're not actively pursuing new collections measures. So people who owe money with CRA, they're stopping that unless it's really severe. Okay, if people have really not paid CRA, then they will still go after them. But no, if you're owing $1,000 from last year's taxes because cash was tight or whatever, you couldn't make the payment, they're not going to be bothering citizens with phone calls or audit inquiries or anything like that. So
student loans, what's happening there?
Sorry, student loans. Student loans. Yeah, they did say they were going to be suspending interest for the next few months. I believe the next 4 months is what's been announced. 6 months for student loans. So that's great for students. Just had a little freeze on those guys.
Okay. Anything that I missed with respect to you, Julien? We've gotten through a lot of questions here online.
Yeah. No, I think we covered lots here. Just kind of going through some notes. Yeah, CCB is going up for some people with kids, right?
What's that acronym? What's the acronym CCB?
CCB, the Canada Child Benefit, right? So that was announced for anyone with kids that are receiving the benefit. It's automatically going to be applied. There's going to be a one-time payment for if you get the GST credit. Well, even they're going to go a little bit beyond who would normally qualify for those. Are the GST credit is usually for a lower modest income. The Canada Child Benefit is going to be if you currently get the Canada Child Benefit, you can expect a bump in that benefit as well.
Okay. Are you wearing pants right now?
Yeah. 1 out of 5 days a week, wearing pants for sure.
Good. I saw an article today how it's important to continue to dress like you do at home, even though you're even at work, even though you're at home. How about you, Julien? Questions for me? Anything that we missed? I mean, I could, whatever. I'm here. If you got anything you'd like to ask me.
Is there any specific industry that you got to be buying into right now, and industries you got to be avoiding?
Okay, so there will be a time. So the cyclical stocks are the kind of riskier stocks. Oil and gas, materials, anything that's more cyclical in the economic cycle relative to defensive stocks. Defensive stocks would be financials and real estate and infrastructure and telcos. There is going to be a time when your advisor and your portfolio manager will likely want to shift you out of defensive stocks and into cyclicals. So riskier stocks. I don't think that's the time now necessarily. We preach quality right now, Julien. Our view has been and will continue to be strong balance sheets, good management, industries that can sustain movement, and that can pay a continued dividend. Right now, if you're not sure, so Julien, if you were to call me today and say, Rob, I scrounged up $100,000, I want to put that to work. What do I do? How do I invest it? Here's what I would say to that. I'd say, let's take a portion of that, call it 50 grand of it, and let's put it into the market now or around now, plus or minus a few days. And then I would kind of wait on the other half, and I would focus on quality stocks. So, I've mentioned some of the sectors that I think are anything that's got a strong balance sheet, good cash flow, good management, can sustain movement in the market. And then the other 50, what I do, Julien, is I would wait for this dip. What we do not want to happen is a guy like Julien, who's a client, calls me and is like, I've saved up money, I've done well, and I want to put it in the market today. And then we're so greedy on the bottom that we end up delaying, right? We don't want to do that. We don't want to delay and miss the rally. There will be a rally, folks. I don't know when it's coming, but we do not want to miss that rally. So I would leg in a portion of your equities now, and then I would leg in a portion either at a fixed interval, 1 month, 2 months, 3 months, or when the market falls, because you do not want to be out of the market for that long. So I'm not sure if I answered that question, but I think there will be a time you want to get out of cyclicals and out of defensives and into cyclicals. For now, we're still believers of quality assets. I just got a question texted to me. How about that? I can't believe I'm answering text right now. Can I stop making my monthly corporate tax installments that I'm making for 2020? I think we've already answered that, but
yeah. So that comes if your installments were owed after March 18th, those installments would also be delayed. Okay, so the installments, your account should be giving you an installment schedule. So if your installment was due February 28th, you still got to make that installment. If your installment was due March 31st, that one gets deferred. No interest.
Okay. Here's another question, and this is maybe a strategic planning question. In the event my corporation has extensive cash reserves, would there be any benefit to removing it for investment? Well, I think I would ask a further question to that, James, first. Now, is the cash in your operating company or is it in your holding company? I think that's a big one. I'm sure as you'll answer that question. So again, if my corporation has extensive cash reserves, would there be benefit to removing it for investment?
Yeah, and excess cash is a big problem a lot these days, especially as there's been changes to not just from COVID-19, but previous changes to excess cash rules and stuff like that inside of corporations. But typically, I don't recommend withdrawing a whole bunch of cash from your corporation to invest personally if it's already stockpiled in your corporation. Unless your advisor is telling you the swing is going to be so great that you recover all of that tax that you have to pay. No. And I don't know, maybe Rob, but you can add some.
No, I think what I would do, James, to answer your question, James is clarifying that it's in his operating account. So first of all, if ever you want to sell this company, I would take a long, hard look at having a holding company for that. Also, liability-wise, I don't know what you do for a living, Jim. I don't know what that business is, James. But you don't want to have a ton of cash in case you're exposed to liability. Civil liability, like owing millions of dollars for a wrongful, a tort, injury or something to someone, or like breach of contract or whatever it may be. You want to have that money out of the operating company. You want to have it in a holding company generally. And then once it's in the holding company, you should invest it directly in your holding company, Jim. So, I mean, again, this is not advice because I don't know your personal situation, but generally what our clients do, operating company, holding company, they move the cash out of the operating company into the holding company. The holding company becomes a bucket that holds cash. And then we open an investment account, and then the cash flows from the bank account in the holding company to the investment account here at Canaccord, where we then invest the holding company cash. I'm sure that's the scenario you see as well, right, Julien?
Yeah, we see that a lot as well. Like I said, there's quite a few changes this past year, so we're seeing a lot of people filter money through family trust into an investment company or something like that. Right, with tax on split income rules being new and that kind of stuff, you got to be careful. So again, it's one of those situations that is very personal, it's very unique. It's not one of those things like, oh, well, my neighbor is doing this, that, or whatever. You need to talk to your professionals and making sure that your professionals are talking to each other as well. I know I'm constantly in communication with Rob if we have a mutual client or something like that to make sure that we have the best plan for each individual, because Rob might be planning something with your investments that if I only knew what he was doing, maybe I could offer something to enhance that plan or do it better or structure it in a certain way. Or maybe I'm recommending something to filter cash in a certain direction, and that's making Rob's plan no good or for whatever reason, okay? These rules are complex. Structures can be very complex. That's why you need to have some advisors that you trust and that talk to each other. I'm a big proponent of encouraging people to talk to all of their advisors and have their advisors talk to each other. And a good sign, I like to tell my clients, a good sign is that if all of your advisors are telling you the same thing, that's a good thing.
Yeah.
So,
yeah, one of the reasons that you're actually on the show today, Julien, is because you're an incredibly proactive guy. So my beef with accountants, I mean, I love accountants. They're fantastic for the most part, but my beef with them is generally they're reactive, right? So that you ask an accountant a question, can I write this off? You get the answer. What I really like about you guys and your firm is that you're proactive, so you try to walk a mile in the client's shoes, and then we can decide together what makes the most sense for the client. So you're spot on with that. There are so many things with respect to the changes, like the family trusts, and if you're not getting quality advice there, even guys like us, I'm not an accountant, but I mean, I have a finance MBA, and my mom's an accountant, my brother's an accountant. I've seen enough of it that I know when something doesn't look right, right? So, and you're the same. You're not an investment advisor, but you've seen enough investment statements that you know when something doesn't look right, right? I'm going to ask you another question here, and then we'll get wrapped up soon here, folks, but keep the questions coming. My accountant sent me a notice that taxes owed for 2019 as an individual, that the payments must be made by April 30th, 2020. So a notice for taxes owed for 2019.
yep.
So that would have been that the payment must be made by April 30th. I imagine that's not personal, right, Julien? That would be a corporate.
Well, if it's personal, if the accountant's saying that, or I could see even some of our letters have been gotten printed saying, hey, your taxes are due by April 30th. We printed it before we updated our templates or something to that effect, right? So if something looks off and you're you're reading on what your accountant is telling you, just call them, just verify, right? Because all this stuff happens so fast, right?
Yeah.
And so I know our back end has been crazy busy trying to update people's templates to change the deadlines and things like that. And so it could just be something like that.
Okay, so Mac is saying it's personal. So I imagine that's been deferred. Most likely, that's been deferred. Well, I don't know your situation, Mac, but most likely that's been deferred. That was probably a letter that got sent out, in the past. I realize now I'm at about 75 minutes going on here, Julien, and it's been a bit of a long stretch here. We did get a ton of questions today, and I really, really appreciate the guests for tuning in. Hey, Julien, we'll get you back on the show again. I'm going to wrap this up, folks. So I'm thankful to Julien Grenier, partner at Talbot Associates. Again, I'm Rob Tatro from robtatro.com, head of the Tatro Wealth Advisory Group here at Canaccord Genuity Wealth Management. We still do not have a name for this show. Does anyone have an idea for the name for this show? Some of the ones I heard were Tatro Talks, like kind of a play on words of, TED Talks. we're in this together. Get rid of the bear and straight to the bull. All sorts of play on words between bear and bull. Something about good news. Something about being optimistic. If you have ideas, Julien, do you have an idea for this for the name of the show?
I even felt this question was coming on even before I came on, having watched your last show, and I couldn't come up with something clever enough that I knew you would really appreciate. You know what I mean? I kind of with a couple duds, but
right.
not worth
We'll work on it. We'll work on it. We'll do a FaceTime, you and I, and you'll have a Scotch and I'll have a Bud Light, and we'll figure it out. Thankful to everyone for tuning in. Again, if you have direct questions, go to www.speaktorob.com. Julien, his email is in the chat. We'd be happy. Sign up to our newsletters. Please subscribe to my YouTube channel. Subscribe or like my Facebook page. I'm thankful for all of you guys for tuning in, guys. That's it for now. We're going to sign out, and we will see you Monday at 3 p.m. Eastern.